Hi, I'm Daphne, and today I'm going to take you through the Nasdaq futures as well as the S&P 500 futures. And we're going to be using a simple tool called the Fibonacci retracement. We're using that because we want to know, now that we're going downwards on the indices, how far are we going to go? So let's get started. So the Fibonacci is a really easy tool to use. I'm just going to show you how to use it. So just a quick explanation. For any up move, like the one you're seeing over here, if it starts going in reverse, which is called a retracement, what you want to know is how far is this retracement going to go, and is there a chance of recovery, right? So what I'm going to do is activate the Fibonacci retracement tool, and I'm just going to quickly show you how to draw it. So it's a very easy tool to use. You can do it as well. So once you have the Fibonacci retracement tool, what you want to do is draw it from the bottom point of the up move to the top point, right? So it's kind of going diagonally upwards, just like this. So I'm going to click one point here, and traditionally you draw it here, but I'm just going to extend it out, okay, to about here so that you can have a better look. So once you've got that upwards, you're looking out for 3 levels, right? So I'm just going to show you quickly what these 3 levels look like. So the first one is the 38.2, which is the one over here. Okay, so 38.2 is the shallow retracement level. Usually it doesn't really bounce back from that unless it's a really strong uptrend. So as you can see, we've actually already broken past that. Now, the second level we're going to look out for is the 50. Because 50 is the midway mark, right? So we're always looking at the midway mark, although it's not considered a key level, but you also want to watch what the candlesticks do at that point in time, what the price movement does. So you can also see we have broken past that. So after the 50, the next one you're going for is the 61.8. So textbook wise, this is called like the proper retracement level. Now, if it can't bounce from this level, then chances are, like you can see over here, we've actually broken past and even close below. So chances are you are going, well, not you, the index is going downwards to about the 100% level, right? So that's essentially what we're looking for to see where it may go. And now you already know that the Nasdaq 100 is a very tech heavy index. There are mostly tech stocks inside. So why is this important? So now that you know where the Nasdaq is headed, I'm going to move on to the S&P 500. Okay, so S&P 500, because even though the S&P 500 is so-called a more comprehensive index, right? Because it has sectors like consumer staples, consumer discretionary, utilities, and all of that. It's a better balanced basket. But tech takes up 28%, okay, about 28% of the S&P 500. So what that tells you is if the Nasdaq is going downwards, chances are the S&P 500 is going to be pulled along with it, because tech is still has a heavy weightage in the S&P 500. So what you're looking at right now is the S&P 500 futures chart, and I've already drawn the Fibonacci for you, right? So let's take a look at where the levels are. So I'm just going to activate my brush tool so that you can have a look, right? So what we're looking at is over here. We have just gone past the 50, right? Which is the midway mark. So that's why I say it's being led by the Nasdaq, because the Nasdaq is already past the 61.8, whereas the S&P is now heading towards the 61.8, which is this level over here. Now, whether it breaks past this level or not, we're going to have to see what happens this week. But there you go. So very easy tool that you can use as well, the Fibonacci, to let you know where the general indices are going, because that would also tell you where the majority of the stocks are headed this week. Right. So I hope you enjoyed this charting video. And remember, for all things trade, trade with Daphne.